Hello, and thank you for your interest in Kumba's 2020 full year results. I am extremely proud of the care and hard work that our employees and contractors have put in against the backdrop of the COVID-19 pandemic. Because of their efforts and care, we have delivered on our commitments to health and safety, ensuring the well-being and safeguarding the livelihoods of our host communities, as well as supporting and serving our customers, partners, peers, government, shareholders, and all our stakeholders. Let me share some highlights. I'm proud to say that in 2020, we marked 4 years and 8 months of fatality-free production. We achieved a record high EBITDA of 45.8 billion rand and free cash flow of 21 billion rand. Our ROCE climbed to 109%, and we are pleased to declare a final dividend of 41 rand and 30 cents per share. Our total dividend for the year was up 30% to 60 rand and 90 cents per share. Kumba maintained a capital efficient and resilient balance sheet, providing a strong foundation from which to navigate the storm. We are extremely excited to announce the approval of our UHDMS project at Sishen, following on announcements of Kapstevel South earlier last year. The UHDMS technology is a game changer for us, as it will unlock exceptional value for the business and our investors. It is another great project in our Future Smart Mining, our innovation-led approach to sustainable mining. Let's take a closer look at safety and health and the enduring value we created in 2020. Our top priority is to ensure that our workforce returns home safe and healthy. In 2020, we achieved our lowest rate of total recordable incidents in 5 years, and we recorded 0 new occupational diseases despite additional demands made by COVID-19. Our We Care program supported our people and communities across the 4 pillars of physical health, mental health, living with dignity, which addresses gender-based violence, and assisting our communities. We spent 296 million rand in the fight against COVID in 2020. Of this, 93 million rand went to safeguarding the lives and livelihoods of our communities. We also increased our procurement spend with host community suppliers by 50% to 3.7 billion rand, supporting the SMMEs that are so crucial to local economies and livelihoods. We also successfully collaborated with Transnet in the fight against COVID and provided PCR testing equipment and contractor support for their personnel. In terms of the national fiscus, we contributed more than 13 billion rand in taxes and royalties, and we invested 6 billion rand in capital, further demonstrating our commitment to the future of South Africa. Direct social investment, including our COVID spend, was 264 million rand. Our commitment to sustainability and the environment is demonstrated by our 10% reduction in carbon emissions from our 2016 baseline. This is well ahead of target, and we are on track to achieve a 30% reduction by 2030. We also provided 19 megalitres of water to our communities and reduced our freshwater usage by 17% from our 2015 baseline, moving us closer to our 2030 target of a 50% reduction. This brings home our purpose of reimagining mining to improve people's lives. Moving on to the business side of Kumba, we had a good year financially, thanks in part to a strong iron ore price. Our Tswelelopele strategy of margin enhancement continues to deliver. Cost optimization helped contain our C1 costs below $33 per ton, allowing the benefit of a higher realized price of $115 per ton to flow straight to our margin. This, coupled with higher iron ore prices and a weaker rand, meant we delivered an EBITDA margin uplift of 5 percentage points to 57%. Quality remains integral to our positioning within the market as a niche producer. This is supported in the long term by decarbonization of the steel industry, increasing demand for our quality products. Turning to our operations, production and waste volumes were lower due to the impact of COVID-19, exceptional rainfall, and some equipment reliability issues. To mitigate these, we have implemented several interventions. We reviewed our efficiency matrix and shifted our P101 efficiency benchmark focus to our truck fleet. This makes sense in terms of maximizing value as we have 140 trucks and 8 shovels. Export sales decreased by only 1.8% to 39.3 million tons. We maximized direct loading and leveraging our integrated sales and operational planning to manage our value chain. Reduced demand from AMSA saw domestic sales drop by 84%. However, thanks to the collaborative contribution from Transnet, we were able to redirect much of that stock to our export markets. Pleasingly, our iron ore quality and lump ratios remain highly competitive and support our product premium. In terms of our Tswelelopele strategy ambition to increase our life of mine to 2040, we are thrilled with the approval of our Kapstevel South project at Kolomela and, as mentioned earlier, the UHDMS project at Sishen. The UHDMS project is a particular highlight for us as it extends Sishen's life by between 3 and 4 years and will allow us to earn a product premium of $1 per ton. A video on UHDMS is available on our website. Since 2018, we have increased our ore reserves by 206 million tons. This exceeds our Tswelelopele target of 200 million tons, 2 years ahead of schedule. The UHDMS project will add between 110 and 130 million tons of reserves, bringing the total additional reserves confirmed between 2018 and 2021 to more than 300 million tons. This demonstrates that our transition to future smart mining that is safer, cleaner, more productive, and more competitive is not a single event, but a process of steady improvement. Looking ahead, let me outline what we currently expect for 2021. Our production and sales guidance is between 40 and 41 million tons, with logistical constraints and the global impact of COVID as our main points of risk. We expect SIB capex to peak in 2021 at around 3.8 billion to 4 billion rand before normalizing to about 3 billion rand per annum from 2023. Since 2018, we have delivered a total cost savings of 3.2 billion rand. This includes 613 million rand of savings due to COVID-related restricted activity, surpassing our target of 2.6 billion rand, 2 years ahead of schedule. We are now targeting an additional savings of 1 billion rand in 2021. The objective is to contain our C1 costs below $34 per ton. 2020 was a year of unprecedented challenges that tested our resolve and our ability to adapt. We believe that we demonstrated both and kept our commitments to our people, our stakeholders, and our country. Not only have we kept the engine running, we are also fortifying our business for the future. Our strong financial performance in 2020, underpinned by a resilient balance sheet and a strong capital discipline, provides an excellent base from which to pursue our Tswelelopele strategy, to continue to meet the ongoing challenges of COVID and to achieve our 2021 guidance. In conclusion, despite its unprecedented challenges, 2020 was a year of strong revenue growth, excellent returns for our shareholders, safe operations, and exciting developments that will extend the life of mine. maintain quality, and unlock enduring value well into the future. Thank you.